handover from the US was a little bit negative, and on the back of that, you have all of the Asian markets trading with cuts this morning.
The split is very good. If you look at the direct taxes, they've grown by 26.6%.
We need to see if 19,492, which is Thursday's low, can be a bit of a short-term bottom.
So we're going to find some reason why interest rates are going to come down.
Getting the initial rates that are coming in there, and it's a little bit more tricky for the bulls.
I think with the IT theme, it's really a matter of what the commentary is.
The export story is one of slow recovery.
We'll have many more Vedanta-listed entities.
For us, it's been a story of a struggle right from the morning.
Now, in these 75 IPOs, raised a total of around 91,000 crores from 2022 till date.
CRISIL says number of upgrades were 1.9x the number of downgrades for the 6 months that just ended.
For good 14 initial years, we have been catering to only group cargo, and in the last 5 years, we have diversified as an independent.
We have payment due coming in the January and August.
The bank noted that headline inflation is expected to average around 5.9%.
Well, that's the day that was. You're with us in the last hour on Closing Bell. I'm Surabhi Upadhyay. With me is Nigel. And Nigel, what we have on the screen is a market attempting to at least hold the lows of the day, right?
Yeah.
Because today was one day when we went below the Thursday low. Last week, Thursday, when we had that big down day, we've tested those levels. We were trading below 19,500, but the bulls are really trying very hard to, I think, defend what are some very crucial levels today.
Well, that's right. You know, Surabhi, if you're going to around that 19,500, 19,470 odd, it seems as of now, at least the markets keep bouncing off there. But we'll need a bigger trigger to bounce decisively off these levels. But besides what's happening on the headline index, the mid-cap index, that's where the real action is. Even in the morning when you were at the low point of the day, even trading sub that 19,500 odd mark, the mid-cap index kept making attempts to move into the green. And as we speak, it's still holding with a gain of close to around 0.2%. It's unlikely, right? You see the market's down more than 100, 130 points on. And in fact, you have the mid-cap index that's trading in the green. And what's more encouraging is, on the headline index itself, the Nifty bank, that's refusing to break that for 44,200 odd mark. So a couple of positives out there. It's a Nifty Financial Services expiry as well that will play out. So that'll be the big mover in the final hour of trade, I think so. But how do you position yourself in the final hour of trade? That's the big question. Mitesh joins us to help us out with that. Hi, Mitesh. What do you make of today's trading session? And fill us in with a couple of your picks.
Good afternoon. So I think, the start was weak, but then since then the market has been sideways. Actually, if you look at the last 4.5, 5 hours of movement, or if you look at the last 4 hourly candles, I think there's been hardly any kind of a movement and it's been very sideways. We're getting now close to oversold levels, but we don't have a sign of reversal. But given the fact that we are oversold or mildly oversold, at least on the upperly and the 2 hourly charts, we have started taking some profits off from the short positions and now are exploring some stock-based long positions. So I have a buy on Sun TV. That's a buy with a stop at about 610 for targets of 645. And Bajaj Finance is the other one, which is now breaking into all-time highs. So keep a stop at about 7860 or just maybe a couple of points below that, 7860, and a target of around 8,050 can be looked at.
Okay, so Bajaj, and that's really been quite a story. The second half has worked out to be very, very good for the Bajaj twins, Finance and Finserv. Aside of that, you have some green in the form of Titan and L&T. It's largely a defensive day. Titan would kind of be symbolic of some of the other FMCG names that are seeing buying as well, consumer names that are seeing buying. Asian Paints, obviously, with crude cooling off. But barring these green pockets, the bulk of the market has been under pressure. If you're looking at banks, larger banks, they've been battling the red zone for most part of the day. Bank Nifty, I take Nigel's point, at least it's not broken levels down, but it's still nursing losses of about 0.5% thereabout. And then autos have seen a lot of profit taking. It's been a very decisive down day for autos, starting with Eicher, Maruti. Look at any one of these, even a Hero, Bajaj. Most of the stocks have sold off after the numbers came in for the month of September. That's been the trajectory. And then Reliance, let's not forget, Reliance hasn't contributed on the bull side today, continues to be down by about 1% or so. Mitesh, just, your call on some of the other heavies, both Reliance and even the IT twins, the big boys, TCS and Infosys, they've battled pressure consistently today. On IT, we're getting into an event now. So positioning will perhaps play out. There's a lot of profit taking happening after the good rally. What would your advice be on Infosys and TCS over the next few sessions?
So in fact, IT was in a phase of outperformance a week and a half back, and since then has kind of cooled off. And now I think it's giving a pullback, which is slightly on the deeper cut basis, which is about giving a pullback in the medium-term chart. So I'm not sure we are seeing the worst of IT, though it may not fall much. I don't think it will still underperform, but there could be some volatility on the downside. So for example, on TCS, I think the key supports for me come in closer to about 34.50 to about 34.25 zone. So that's the area which I would want to see if the stock gives you a reversal on the hourly charts or some kind of bullish pattern formation there. Then you would want to immediately buy it. Infosys, I think I'll still avoid it. It's still an underperforming stock, and the overall pattern isn't as strong as HCL Tech or TCS. So I think within the IT pack also, I think TCS and HCL Tech are my preferred bets, and I would avoid Infosys or Tech Mahindra for the tech.
Okay, got that. Well, Prashant has also joined in now. Prashant, good to have you here. So bulls are saying, live to fight another day.
Don't write them off. So I would say 55 minutes left, right, for market closing. But that bounce is sold into. I mean, actually, even as it was coming in, it was looking a little better than what the screen is indicating right now. Things are down a full 100+ points. To be sure, 40 points off the day's low, but yeah, I mean, it's lower. The good thing, Surabhi, one thing is that during the course of Asia and what we've had of Europe, US dollar has not done anything naughty, and yields are steady. I mean, there's nothing.
107? Do you want it to get any naughtier than that, Prashant?
I saw some 106.9 something as a print, and I said, well, this is better than 107. I mean, but they're right there. But the point is, they're not done, even more. Yeah. And hopefully, I mean, with the magnitude of the move that we've seen in US Treasury yields on the 10-year, I think we're up 150 basis points in the 10-year. Maybe we will see a bit of a cool off. It's happened many times in the past. In 30, 40 days, you've had such a huge magnitude of a move. Hopefully,
then it consolidates. At least just stay steady.
Actually drops. I mean, we've seen this. I mean, a third of the move actually gets retraced. So it's possible. We're getting to the point where some reversals are to be expected.
And in the first hour of trade itself, we were down close to 105 points odd. Yeah. So if someone said that in the last hour of trade, you still be holding with that cut, well, from a bullish perspective, we'll say at least, we didn't see incremental losses. If you have the 10, I know everything is up. Everything is making record highs. The yield, the crude oil prices, the dollar index,
at least crude
cooled down.
One positive as this week started, right?
And even the markets are almost at record highs. You're saying all asset classes are, So, anyways, I just thought of that. But we have Hemang Jani who joins us to help us out with some analysis. Hemang, since we're talking about crude, ONGC, that's one of the big casualties today. That's down close to around 3.5% or thereabouts. I think the market would say ignore ONGC. We're happy that crude oil prices are coming down. But your view on the stock?
Yeah, good afternoon, Nigel. I think ONGC has done reasonably well the past few months, and first time we are seeing a bit of a correction there in line with what we are seeing on the oil price front. So our take is that from current levels, I don't see any significant improvement either in the crude oil price per se, or more so coming to the both oil as well as gas price scenario that one is really looking at. There is not going to be any significant improvement. Also, the quarterly numbers, we have to typically see what kind of subsidy component the company accounts for. But typically in an election year, want to stay away from some of these OMCs and oil and gas related stocks, where government would have their own kind of priority to deal with. So I think ONGC would be a good avoid at this point of time.
All right. Well, the big talking point today was Vedanta. And I spoke to the management. I spoke to Mr. Anil Agarwal, and there were 5 big takeaways. So let's run you through them. He believes that shareholders will have the flexibility with this entire restructuring process that he's announced. And he says that everyone will be on board because it's a win-win. So he believes that, in fact, the shareholders, the creditors, the government of India, everyone will give this particular announcement a thumbs up. Next up, he's talking about selling one of their assets. And this demerger is okay, but the bigger focus is going to be when they sell those assets. And he says that the steel asset will be sold. He's received plenty of interest. And by the end of this fiscal itself, that'll be out of their books, which is good news. Next up, he also says that besides the steel asset, well, he could be looking at bringing in strategic partners in some of the businesses, maybe in the copper business, maybe in the zinc business, or maybe in the oil and gas business as well, because he says as of now, some of these businesses are not getting the real value. So that could be another option. Point number 4, which is very, very important. He says there's no need to worry with regard to Vedanta Resources debt payments. Remember, the street is a little bit worried because a couple of maturities come up, namely $1 billion in the month of January. And later on in 2024 as well, you have another $500 million out. So he says both those two are secure. They'll be either repaid or refinanced, but no worries in terms of a default. And finally, he says that from now on, creating shareholder wealth is priority. He's going to be looking at corporate governance. And also he says that all these businesses will be professionally run. So those are the 5 big takeaways coming in from that interview with Mr. Anil Agarwal. In fact, let's hear out what he had to tell me earlier today.
By March, we will complete the transaction. And it is a very unique site whereby anybody want to produce green steel. This is the only site where we have a gas availability, complete infrastructure availability. As somebody want to produce 15 million ton, internationally people are very keen to have some step into India. So this is the best opportunity for them. We have about $1 billion payment in January and $500-600 million payment in August. Both are completely lined up, and we're talking to the same bondholder, and everybody is very, very excited, and we are making them secure. So this will be very exciting for them, and we are looking to close this. So once for all, that's out of the way, and we're also looking how can we do the reduce the debt or make it a zero debt on the top, and steel and the iron ore will take care of that. Payment due coming in on the January and August. We are completely lined up, and we have made a plan with the bondholder, and we'll be announcing shortly. So we all put into the sleep. We also we have a phenomenal response for our steel and iron ore sale, which can be taken care of the entire debt. And we believe that by March, we'll be able to complete the transaction too. So that was, both options are there, either refinancing or making payment from ourselves. Refinancing is completely lined up, but we are also looking whether we can pay it from our side.
Interesting conversation with Mr. Agarwal today. Hemang, what do you make of this? You know, the merger, demerger, merger, that story has been played before. But now Mr. Agarwal is talking with some intent. He believes he's going to unlock value. And he also says that don't be worried about that pending debt in Vedanta Resources books. How do you view this stock at around 230 rupees? A few days ago, it was 205 rupees. Your take.
The demerger by itself is unlikely to unlock any value as such. Okay, so what market wants to see is whether there is a credible plan in place to deal with the upcoming bond maturities and the gap which is there in the cash flows. Once that concern is addressed, then there is a certain degree of comfort. And while the managements may be able to articulate certain things about demerger, etc., but it will also create some sort of inflexibility in terms of managing the cash flow across different businesses. So this might be just a temporary respite, but I don't think market is convinced about the company's ability to deal with the debt at the promoter level. So I think it would be a good idea to kind of avoid at this point of time, or rather sell when you see a little bit of pullback in the stock at this point of time.
Names like Hemang, MCX. Any thoughts? It's Friday. It pulled back quite big time after that sharp cut, down about 3% now. Another one is Delta Corp. Again, hit by that big tax notice, 137, 138. Nothing's going to happen here in a hurry, but any point in looking at something like a Delta Corp?
Yes, so Prashant, MCX clearly looks like a good story, and even though we have a little bit of negative in terms of delay, in going live with the new TCS platform, fact is that you have some sort of migration which will happen. The volumes are growing 25-30%, and you don't have too many plays within that space. So I think that is surely good. If you see a bad day in the market, it would be good to add MCX. Delta Pop, a little bit of tricky situation. While the valuation and the theme or the story looks very good, this legal overhang may continue, and the size of the amount involved is too large. My sense is that it would be good to have a small allocation towards these kind of things, because typically when the legal matter resolves, the stock runs up quite sharply. So these are the times where you will probably be able to get at a value which is looking quite attractive, though there is going to be an inherent risk for there.
By the way, just want to point out Jyoti Laboratories. Take a look at what's happening to that stock. There's a massive surge underway. It was always doing well since morning, but now it's 11%, 11 to 12%. Yeah, look at that spike that's come in. Big move on Jyoti. I mean, today has been, generally speaking, a good day for FMCG. Marico, for instance, reacting to a couple of positive brokerage upgrades coming in as well. Hemang, any thoughts on Jyoti? I'm not sure what's triggered this. I was checking the block data. I don't think there's been a block in the last couple of hours, but big buying. Any thoughts in case you cover the stock?
To be not looked at Jyoti Lab per se, and no specific comment or recommendation at this point of time.
Okay, fair enough. No worries there. The other movers and shakers today are, of course, from the auto space, as we were just pointing out. A couple of these names are under a fair amount of stress. Eicher, Maruti, most of them are down and out. In fact, Hemang, let me quickly take your sense on this. The word that we had from Bajaj was, for instance, that their export recovery is on track, and they're bound to see a good festive season as well. Stocks are not showing that much of an enthusiasm. It's more of a sell-on news that's playing out. What are you doing with autos?
While the numbers were by and large not that great, particularly Maruti, Mahindra tractors, even Tata Motors passenger vehicle, the numbers were not that great. While we had positive surprise come through from TVS and Tata Motors CVs, I think people are going to focus more on the festive performance of some of the companies, both two-wheelers and the passenger vehicles. So while you're seeing a little bit of cut in Maruti, Eicher, and a couple of names, I think the overall view over there continues to be positive, and slightly more color on the festive season demand and the sales will add to that conviction. So at this point, we have a positive view on both Maruti and Tata Motors. Even Ashok Leyland looks quite interesting at this point of time.
Okay, got that. Hemang, stay on. We'll have some more questions for you. But right now, we do have to take a very quick commercial break. On the other side, we'll also have Rajesh Kothari of Alpha Accurate Advisors join in with some perspective on the market.
Welcome back. Well, the markets are more or less, where we started the show, but a few of these names, particularly PSU banks, are doing well. PNB has moved for the high point of the day. Union Bank as well is doing well. And Escorts actually was down more than 2.5%. So that as well has cut its losses. I think we should get the intraday chart of Escorts up for you on the screen. But JSW Infra, well, it made a solid debut on exchanges today. The stock listed at a 20% premium to its issue price. Do note that this was the first IPO from JSW Group in the last 13 years or so. The stock continues to build on from there. Vivek joins us to fill us in with quick analysis. Vivek?
Well, absolutely right. It's the first IPO from the JSW Group, after almost a decade. And this is a large one as well. At the current market cap, values the company well over 30,000 crore. And when you're talking about, what exactly the company does, remember the company is the second largest ports as well as sports terminal operator as far as India is concerned. Now, along with that, the company also provides maritime, related services, including cargo as well as storage solutions as well as logistics services. Now, talking about, how the shareholding looks like post the IPO, the promoter portion has now come down to 80.72%, which indicates that going forward there could be an opportunity for the promoters to actually go ahead and pay a stake in order to meet the minimum public shareholder norms to bring their holding below 75%. Now, what does the company own? The company has 9 port concessions as of June 2023 along both the east as well as the west coast of India. And remember, one important thing to note as far as the company is concerned is that majority of the operations, majority of the clientele are within the JSW Group itself. So almost 63% of the total volumes is derived from the JSW Group customers. Company currently has a capacity utilization of 62.6 and balance 37% is from third-party customers. What is the total capacity of the company? 158.4 million tons per annum, of which, FY23, the company actually handle the capacity of over 92 million metric tons. The key to watch out for going forward will be whether the company can go ahead and decrease the kind of the kind of dependence it has on the JSW Group itself, and whether it can onboard more third-party customers.
All right, Vivek, thanks very much for that. The management has said that they would like to go to a 50-50 kind of share between dependence on JSW Group, JSW Steel primarily, and of course other clients as well. A quick comparison will be interesting to do. This is JSW Infra, which is the second largest commercial private port operator, compared to, of course, the number one player, which is Adani Ports, and the graphics will come up on your screen. So, you're basically talking about JSW's capacity being about a fourth of what Adani Ports' capacity really is. So this is the total capacity in a million tons per annum. There is another graphic which will come up, which is the capacity handled. And again, similar kind of ratio, 92 for JSW Infra, 340 for Adani Ports. You look at, comparison in terms of revenues, EBITDA, profit after tax, and they are largely in that, 1/4 kind of range for JSW Infra as compared to Adani Ports. So those are numbers. Valuations are interesting. On an EV by EBITDA 1-year forward basis, the gap actually has closed after the big pop that we've seen. For JSW Infra, it's trading at about 12 times 1-year forward EV by EBITDA. In the case of Adani Ports, it's at about 14 times. Adani, of course, is number one, but the gap is significant, very, very large still. In terms of the number of ports and terminals operated, these are not just ports, but JSW Infra operates 7 terminals and 2 ports. In the case of Adani Ports, it's largely all ports that it operates. So that's a quick comparison coming through. Much larger player, but it's not every day that you have a ports operator coming to the market with hard physical infra around the country, and JSW Infra has done just that. Well, let's actually listen in to the management. We spoke with Arun Maheshwari, joint MD and CEO of the company. Just listen in to quick sound bites and we'll come back.
The debt on the book post this IPO is zero. Net debt is zero. In fact, 5 years back, our total volume on the third-party business was only 6%, and today it has grown to 37%, wherein the volume has grown 3 times. Going forward, making 60-40 ratio or 50-50 ratio in favor of the group looks most likely in the coming years. The capacity what we are going to, or the volume what we are likely to handle, FY23 first quarter, June 23, FY24 first quarter, we have handled 25.42 million ton. I believe that gives a very good, fairly comparison, what we are likely to achieve. We would like to maintain the growth momentum. In the last 20 years, we have grown at 22% CAGR on the volume front, and our ambition would be to maintain that.
Okay, well, that is the new listing. Rajesh Kothari is with us, Managing Director at Alpha Accurate Advisors. Rajesh, good to have you with us here. Good afternoon. I'm sure you would have looked at JSW Infra when they came and they were raising money and doing the rounds, meeting investors, etc. Any thoughts on this one? Not that many. I mean, actually, in terms of listed port entities, you only have a couple, and JSW Infra being the second one. Your thoughts on this one?
I would, would not like to comment on stock specific. Yes, it is an interesting company. As you rightly said, there are only, select companies available in such a space, which is going to, of course, grow over a period of time. But I would not like to comment on the company specific.
Okay, all right. Rajesh, got it. So, do you have a view on the market itself, Rajesh? I mean, how much cash are you sitting on? I don't think you take very large cash calls per se. But some that we've spoken to have said that they have raised the level of cash in the portfolio, waiting for better kind of levels across the board. So just wanted a quick word on the market itself.
The market still looks very interesting. If you ask my personal view, we are still reasonably positive on market. I think there is enough opportunity across the spectrum, be it large cap, mid cap, or even what I would say, a good part of the small cap, Of course, micro cap is probably where there is a lot of, I would say, some speculation element, some bubble element is happening. So I would say clearly tell investors to get a little bit caution when you go to the extreme tail side of the market. But otherwise, we get enough opportunities across various market cap. The earnings growth has been quite strong. The balance sheet is improving. The ROEs are quite healthy, and I think valuations are still reasonable. If you look at the Nifty, for example, it is right now trading at almost close to 10 years average price to earning multiple on a FY24 basis. If you look at mid cap and small cap, yes, compared to 10 years average, they are a little bit high. But then if you look at the ROE of small cap and ROCE of small cap 10 years back, it was just 12%. Today it is almost 17%. So when your ROCE moves from 12% to 17%, clearly your average valuations of small cap index will not remain what it used to be 10 years back, unless and until if you have a view that ROC is now going to deteriorate significantly. And clearly, that's not our view. So I think even mid and small cap, if you ask my personal view, the good companies within this space, I think, we are getting enough opportunities across the spectrum.
Okay. Got that. By the way, some earthquake tremors felt in New Delhi, so hope everyone's safe. I think as of now, agencies are saying that this could be 4.6 on the Richter scale in magnitude. So just hoping that everyone's safe and sound out there. Rajesh, hi, good afternoon. So I was noticing that you have a fair amount of exposure to industrials in your different portfolios. You have stocks like Hitachi, ABB, Craftsman Auto, I think even CG Power and industrials. So I guess it's fair to then ask you about this. There's a big debate going on out there whether the best is behind these stocks. The industrial capex theme, it's been the theme of 2023. And now there's a debate on whether it's time to start booking some profits or whether you keep riding it as we get closer to general elections. What do you say?
I think clearly, we have been bullish on this theme from, I think, the last 2.5, 3 years. Since early 2021, several times. In fact, during our interaction also, we mentioned that we've been very bullish on capital goods as a theme. And it definitely has really played, very well. God has been kind. From here, I think, if you ask my fundamental perspective, the big growth, be it order intake across the various spectrum is going to continue. Look at, for example, data centers. They're going to grow 5 times in 5 years. Which are the biggest beneficiary of data centers? Clearly the companies which can supply solutions for that, be it a power transformer, be it the smart grid, and the related products. And clearly few companies which we are holding in our portfolio, they are the largest players catering to that segment. Likewise, there are many other segments within capital goods which are the new growth drivers for capital goods. Traditionally, road, port, and infrastructure, they were the growth drivers, and they grow about 3-4% per annum basis. But the new growth driver, be it renewable energy, be it automation, be it data center, be it smart grid, these are the new growth drivers, and they are growing at 20% compounding or 30% compounding for next 3 to 5 years. So the best is definitely yet to come. Now, question is, how much is already priced in? And that's where one can have a debate that is it fully priced in or is it half priced in? But we remain positive, and I think India is underinvested in last 10 years. It is after last 10, 15, 20 years that we have seen the companies are reporting 20% growth in order intake. And that's after a really very, very long time. Remember in 2003 to 2008, capital goods index went up 15 times in 5 years compared to market which went up 5 times in 5 years. I'm not saying will it happen again? I don't know. But whether the building blocks are getting in place, 100% yes. So we remain positive. Of course, within that, you need to be selective. We also do profit booking in few parts, and we keep identifying new opportunities. So that's, of course, in portfolio, we keep doing it. But on an industrial space in general, we remain fairly positive on these themes.
I know, Rajesh, you don't want to talk about specific companies, but if I can gently nudge you in that direction, but talk about the industry. You still own Safari in your portfolio, the luggage maker?
Yes. Safari is one of our top holdings in our AAA budding mid and small cap portfolio.
You know, there was this thing going around that Safari has basically overtaken VIP in market capitalization. Just talk to us about that investment. I mean, what do you think really worked in its favor? Was it just was it the top change in management which really saw Safari doing so well? Was it a competitor which faltered? What are the ingredients which kind of came together for what we've seen this company do and the stock price do?
First, undoubtedly, the management has to be great. The execution has been the best from Safari perspective. They were anyway top 3 players. And within organized, actually, there are only 3 players, VIP, Safari, and Samsonite. And each of these players have their own core competence and competitive advantage. Second very important thing what has worked for Safari is to be relevant to the customer. That's very, very important. To a luggage kind of industry, which is otherwise a boring industry from the consumer perspective, they added life to that bag. I always say they added life to the bag. So if you, for example, if you visit airport, you can see multicolor bag, depending upon the age, people have the different preference, different styles. So that kind of thing, that's what added in last 5 years. Before 5 years, luggage used to be like luggage, they are really boring, okay? But that's no more a thing. So in terms of the SKUs, in terms of the product design, in terms of innovation, in terms of connecting to the youth, I think that has worked superbly for Safari. And of course, in these last 3-4 years, the China imports becoming a problem, the trends from soft to hard luggage, all these things have further accelerated those trends. Because if you want to have a soft luggage, probably even unorganized sector in a 10 by 10 square feet room, you can probably produce one soft luggage. But if you want to produce a hard luggage, it takes 40 crores of investment minimum just to buy one machine which can manufacture that hard luggage, So a lot of things have worked in their favor, and that's where the results are in front of us.
Rajesh, just to add on to that, I've been lucky that I've got a chance to interview Mr. Jatia a couple of times. And just to give our viewers a couple of stats out there, in 2012, when Mr. Jatia, took over Safari, Safari's revenues were 1/10 of what VIP was doing. VIP was already doing 800 crores at that point of time. Safari was doing 1/10 of that. Now, as of today, VIP does around 2,100, 2,200 crores of revenues. And Safari does nearly 60% of that. So from 1/10, they're almost 60-65%, growing at a faster clip and eating into the market share big time. And Mr. Jatia, kudos to that man. The way he's grown this company, and fabulous.
Brand perception has changed.
Yeah.
And branding, marketing, you see it when you're out at the stores, you see that difference.
Indeed.
In terms of just getting more shelf space as well. So that's really played out. Since we're on the subject, Rajesh, just a quick word also on some of the other consumer plays that you have in the portfolio. You have Titan, You also have Trent. So I think when it comes to retail, you're playing it through the Tata Group across, different avenues. Tell us what the expectation here is. Discretionary, would you look to add more? Because that's a well-documented theory as well, right? How the upper end, the premium end of consumption, that's really taken off very well.
Well, I think probably, it is just not about the premium end. If you look at the trend, the story is completely different. In case of trend, the story is Zudio. And Zudio is not the premium end. Actually, it is a economy end. So I think it is not about whether you are on the economy side or whether you are at a executive side or whether you are at the premium or whether you are luxury. The important is how you execute that strategy, irrespective of which segment you are. So Trend was actually west side, and from west side, Zudio, they added almost roughly 1.8 million square feet in last 4-5 years. So Trend has added one trend in last 5 years of Trend journey. That's huge. That's massive. Am I right? How many companies have executed that? So it all comes down to your final execution, making sure that you offer relevant product to your relevant customer at the right relevant price, and to keep changing depending upon the fashion, be it Titan, be it Trend, or be it like Safari, what you mentioned, across the consumer segment. I was listening to interview of Adidas, CEO, and he was saying in consumer, if you want to be successful, the one-line mantra is be relevant, because trends are changing fast. If you remain relevant, customer will keep buying your products, and that engagement will keep increasing. And if you do more of it, it adds to your operating leverage. It adds to your muscle power with your distributors, muscle power with the retailers. And that's basically finally leads to high return on capital employed and high earnings growth.
Okay, no, absolutely. Well said, Rajesh. Good conversation today. Appreciate you joining in and running us through, some of what you like and, of course, the thought process behind finding these ideas and investing in them. Thank you. Well, we'll take a quick commercial break here. We'll just take a look at the Nifty before we do that. Still down 0.5%, just above 19,500. We'll come back. We'll tell you what's happening in dealing rooms. My colleague Nimesh will get you the D Street chatter. After that, quick trading ideas with our technical experts lined up. Okay, welcome back. You got the market right there. No real change. At least index level. Stocks we'll get to in just a bit. But it's time to take stock of what's happening in dealing rooms. D Street chatter, where Nimesh gets us all. The buzz is picking up. Nimesh, hi afternoon. What are you hearing?
Hi, Prashant. So weak day for the markets, largely on back of global cues. But the good part is that there is a lot of traction in the broader market. So that there is a lot of resilience in the mid cap and small cap, and that's showing up in a lot of numbers as well. I guess at the index level, the mid cap index is up just 0.3%. But there are a lot of stocks in the broader market which are doing good, buzzing in trade and good volumes as well. So looks like there is a larger participation from the institutions as well as retail investors in the broader markets in today's trade. I guess the Nifty is very close to that crucial support of 19,500. So that's a level to watch out for. If that gets broken down, then we can see a sharp sell-off in the days to come. So that's a kind of feedback from the technical experts. I guess from a sector point of view, the sector clearly stands out is the financials. That's the one space which is well bid as well. And within that, the housing finance companies are doing good today and in good volume. So clearly a lot of resilience in the broader markets. And I guess from a Nifty point of view, 19,500 is a very crucial level to watch out for.
All right, 19,500 indeed. Nimesh, what about individual stocks though? Since it's a stocks because market, you must be having quite a few.
Well, in terms of individual names, the first stock on my list is Patanjali. After a long time, has come back into my chart list. Been consolidating in a very narrow range for the last many days. The feedback is maybe a large selling from a long only FI seems to be largely over in Patanjali in the last few days. So that's the first stock. The second stock is RR Cable. Since listing, there has been a big move in that stock as well, and on strong delivery buying as well. So it looks like some of the fund movement is shifting from other cable companies to RR Cable in the last many days. So expect delivery volumes to be quite high in today's trade as well. The third stock is Shriram Finance. Within the financial space, well bid by the large institutions in today's trade, and also there were a couple of reports as well, wherein Citi has actually put out a positive catalyst note on Shriram Finance today. So that's buzzing in trade. And the last one is Dream Folks. There were a couple of blocks last week. Looks to me that some selling pressure from a leading long only fund seems to be largely over. And again, the stock is currently at a 200 DMA. So some of the buying traction seems to be back in this particular stock as well.
Okay, got that, Nimesh. Thank you very much for all the buzz and all the chatter today that you're picking up. Let's get back with Mitesh then, figure out what could be the next trades to look at. Mitesh, so what's the advice now getting into the final leg of trade today?
I think I would suggest BDST in Chola Finance with a stop at 1240 for a target of 1275. And Birla Software, I think, B Soft. That's reversing after a few days of correction. Could be a good trade on the long side. Suggesting a BTST again here with a stop at about 491 and a target of 505.
Okay, all right. Mitesh, there's some kind of buzz on VIP. And as we have been pointing out, VIP has been one of the big underperformers. But now there could be a potential deal. So we're waiting for fundamental analysis. But on the technicals, how's that chart looking? It's done nothing actually in the last 1 year or so.
Nigel, VIP is something which actually, if you look at the history, has been doing a contracting range between levels of 745, 750 on the upside. In fact, in the last 1.5 years or 1 year and 9 months, we have had about 4 or 5 weekly closings around this zone, but not closing above 750. And then you have a downside, which is 575, 550 zone, which is not breaking down. So I think it's still a consolidation. We don't have a signal of a breakdown or a breakout. But I think, the longer the consolidation, once the breakout happens, the trend can be stronger. So I think for the time being, it will remain into a sideways zone. But yeah, if it shows sign of getting past 725, 750, then I think this should try and hit 4 digits eventually after the breakout.
Okay, got that, Mitesh. Thanks very much for all the trading advice today. That's Mitesh with a couple of thoughts on the market. Still down about 100, so there's not much of that recovery inside. It's a 100-point cut, and that isn't going away in a hurry. Some stocks from the mid-cap banking side that really catch the eye today. Look at Ujjivan Small Finance Bank, about 8 to 9% up over there. Union Bank is at it. Bank of Maharashtra, IOB, PNB. So PSU banking rally, that continues as well. Big moves there on that side of the screen. Mid-cap index still holding on to a gain of about 66, 67 odd points as we see things. So mid-cap's doing quite well, as you mentioned, Nigel. It's not that much a large cap day, but mid caps, and within that, mid cap financials having quite a run.
All right, it's time for a whiskey, I think so, because we have Piccadilly Agro Industries. Well, that's up close to around 20% today and has clocked gains of over 200% so far this year. Surabhi joins us to tell us all about this particular rally. Surabhi, cheers.
Cheers, Nigel. So let me start with what the company does. The company is into sugar and the alcohol segment. Currently, around 60% of the revenues comes from the sugar space and the 40% comes from the alcohol space. Now, why we're focusing on it today is Indri, which is their single malt, has been awarded the best whiskey in the world at the 2023 Whiskies of the World Award. In the past 2 years, it has won over 14 international awards. The whiskey is available in 19 states in India and in 17 locations internationally. It will also be available in the United States and some of the European nations in November of this year. Now, in FY23, they had produced over 15,000 cases of this particular whiskey, but we do not have the sales volume. But overall, on a consolidated basis, the revenues were 600 crores with an EBITDA margin of 10% and a net profit of 22 crores. Cash flow from operations, they have positive cash flow from operations, but slightly under 40 crores at 37 crores. When you look at the shareholding, it's largely promoter driven. There's no institutional holding. Around 70% is held by the promoters. Now, what we have to watch out for in this particular stock is the potential revenue from the whiskey sales, any plans they have of scaling some of the other brands that they have on their portfolio, and also how the revenue mix will shift from sugar to, say, distillery or the alcohol segment. And that, I think, will be an interesting spin to Piccadilly Agro.
Okay, all right, Surabhi. Thank you very much. That's a very interesting story. I didn't know about the Indri Connect. I must say, I can't vouch for much. I'm not an expert on this subject, but I know of a couple of those Indri fans out there, and it seems that the award is only, proving them right, so to speak.
I've been slow off the blocks. I've not yet got my hand on this one, but Surabhi said one of the triggers is higher sales, so we'll contribute.
Okay, well, on that note, let's talk about now dealing with a bit of a hangover, a tax hangover, if we may. And this is more troubling news coming in for quite a few of the casino and online gaming companies. Sources are telling us that online gaming companies have received fresh tax demand notices from the Mumbai unit of the Directorate General of GST Intelligence. Tim C is here with the details. Tim C, these are big numbers the taxman is asking for, right?
Yes, well, that's right. The taxman has now sent fresh notices to online gaming companies, and this time it is the centre. Remember last what we heard when Dream 11 went to Bombay High Court filing a writ petition that was against Maharashtra state GST audit. Remember, GST is a combination of state and centre, and that is what it is now finally over here also, where earlier notices, demand notices were sent by Maharashtra state GST audit worth about 18,000 crore rupees to Dream 11, and now it is the centre through their investigating arm DGGI Mumbai zone sending fresh notices to Dream 11 claiming about 28,000 crore rupees for not paying appropriate GST as charged to be against the rate of 28%. Also, another company which has received tax demand notice from DGGI's Mumbai zone unit is Play Games 24/7, which has got a demand of about 21,000 crore rupees. Remember, these demands are since July 2017 till March 2022, and these are based on inappropriate payment of GST. That is, these companies paid GST on 18%, but ideally they were supposed to pay on 28%. And as we speak, from 1st of October this month itself, with the new GST Council decision coming into effect, that all gaming companies, casinos and race courses, they will have to pay GST at 28%. Back to you.
All right, Timsy, thank you very much for that, and welcome back. Timsy is, of course, back from a maternity leave, and good to see you back, Timsy, and great start. Thank you. We'll take a quick commercial break here. We are back. Jay Bala of Cash the Chaos will be with us on the other side. Stay tuned. Jay, of course, looks at technicals, and he's been calling for caution for some time. That's playing out. Back with Jay on the other side. Okay, welcome back. Counting down to the market closing. Jay Bala is now with us of cashthechaos.com. Jay, good to have you with us here. Markets under a bit of pressure. Is 19,500 going to hold? Is it important that it hold? And near term, what's the prognosis?
Yeah, in the very near term, I anticipate a bounce to about 19,800, just like I expected last week. I don't think the bounce we saw last week to about 19,760 was good enough to qualify as a complete bounce. So even if the markets were to drop, I think it will hold about 19,222. I think even 19,350 as a good support will offer the markets support. But from a slightly higher time frame, the markets are likely to drop lower because of global macro, and India at this time may not be spared, and it will probably go in sync with the rest of the global equities.
All right, Jay, hi. So the Indian markets could trend lower, and the Nifty Bank will have to play a role, right? In the last 10 days or so, we have gone to 43,800 and we have bounced off that. Do you think that's under threat?
Yeah, the problem for the banking sector is coming from the private sector banks, like I pointed out last week. There is a considerable amount of weakness from HDFC Bank, Kotak being the weakest. And now this week, ICICI has clocked a lower low after clocking a lower high. So, the pressure for the banking sector is coming from the private sector space. But SBI is trying to compensate and trying to defend the index. So if the banking index were to stay above, go below 43,830, then that will be a problem. And the next support is about 43,500. So the banking sector is actually causing quite a bit of worry than the frontline indices. So watch out for weakness coming from the banking sector space.
Okay, so that's a warning we need to keep in mind. Jay, just stay on. We have a story coming in, and this is an exclusive. We're picking up that IDFC First Bank could be looking at some sort of equity fundraising. Sudarshan has the details on this one. So,
the private lender IDFC First Bank is all set to launch its QIP today for an amount up to Rs 3,000 crore, including green shoe option. And price for the same is likely at Rs 90 to 91 per share, which will be at a discount of 3 to 4% from the current market price, which is around Rs 94. The last time IDFC First Bank made a QIP was in 2021 for amount of Rs 3,000 crore, and the price that time was around 57 per share. This year, if you look at the stock performance in 2023, both the stocks, IDFC and IDFC First Bank, have had a major run. Both the stocks are up more than 50% each. CNBC-TV18 has written to IDFC First Bank asking regarding the QIP launch, and the reply is still awaited. But IDFC First Bank has a shareholder approval, which is valid for 1 year for the fundraising.
okay, Sudarshan, thank you very much for that alert on IDFC First Bank. We'll keep that in mind. Jay, let's get back and talk about, of course, the biggest story out there in markets worldwide, right? And that is what's happening to US yields. I mean, it's relentless. 4, 4.5, then 4.6, 4.69, I think, overnight. What's your sense? What's playing out here, and what are the levels you're looking at?
Yeah, the momentum for the US 10-year yields is still unabated, and there is still further highs to come through. But I anticipate some sort of cool off for the US 10-year yields about 4.8, around that ballpark. But if 4.8 and change were to break through, I think the next level is going to be about 5.3. The basic point is we have at least one more high to come through for the US 10-year yields. But I'm no longer bearish on the ETFs, IEF that tracks the US 10-year yield. But since no longer incrementally bearish, there might be cool off for the 10-year bonds.
Okay, very quickly, Jay, give us your levels you're looking at on Brent as well as the dollar index.
Yeah, as long as Brent manages to hold 87, still bullish, and we could have one more higher highs to come through. And dollar index is on a streak. It's on its 11th consecutive week of gains, and it's continuing. From a very short-term perspective, anticipate the dollar index to at least print about 109 to 110. From a medium-term perspective, much higher levels. The pullbacks are likely to be bought. If you look at the cross currencies, USD JPY is going to be the most important. And if USD JPY crosses 151.95, most of the technicians will turn bullish, and I'm anywhere bullish for the long term too.
Okay, and okay, got that. Sorry, you mentioned oil as well, Ajay?
Yeah, yeah. Oil 87 is pretty crucial. My thesis is that if 87 breaks, oil will fall in sync with the global equity markets. I'm waiting for markets to confirm where it's going. But my principal thesis is oil is going to drop along with global equities.
Okay, all right, fair enough. We'll leave it there. A shorter conversation than usual, Jay, but we'll make up next time. Thank you very much for joining us and running us through what you're making of things. I think we've come to the close of today's session. Just a minute left and counting down. Pretty much around where we opened. I mean, 19,522 is where we are at on the Nifty. I think which is 0.6% loss, less than 0.5% cut on the Nifty bank. So, I mean, again, neither here nor there. Mid and small cap indices, maybe just a quick look before we go any further. Mid cap index, small cap index ends 0.5% higher, and the mid cap index will end just less than 0.25% in the green. So, broader markets up, but the Nifty, Bank Nifty both lower. Advanced decline slightly skewed to the negative side, but nothing very large or outsized at all. But lots of movers, both up and down, not just in large caps, but in the broader market as well.
Okay, if we talk about the mid caps, relatively better off because there's at least some green as the day closes up. Though you'd have to say the number of declining stocks was still more. Over 1,500 declining stocks, almost 1,600 actually, and about 1,400 advancing stocks. The financials on the mid cap side, they've done well. Ujjivan Small Finance, about 9% on that stock. Union Bank, the entire PSU party basically, PNB, Bank of Maharashtra, IOB, Bank of India. Big day for PSU banks once again. And then some names, Himadri Chemicals on the chemical side. Zomato had a good session today, 4%. There were some block deals on Zomato, did fairly okay after that. So those are some of the key gainers when we are talking about mid caps. But Nigel, let's actually recap Vedanta as well. So that six-way demerger, I think for the time being, the market's holding on to it with some hope. 3% up as we're closing out, 4% up actually.
And Mr. Agarwal was very confident, right? He's saying that he's going to make those payments that are due on Vedanta Resources. He's saying he's surely going to get the steel assets sold, and there's plenty of interest out there. And now he's talking about corporate governance, the company being run by professionals, and he's looking at shareholder wealth. So he has to walk the talk. But the commentary as well was positive. And the stock didn't sell off, by the way. Yeah. In the first few minutes, it came down, I think, from around 230 odd, it fell down to around 225. But from there, it saw some buying interest. So it's living to fight another day.
That's been the Vedanta story. For the market, 19,522. So the bulls have defended that level of 19,500. Let's see. Tuesday is done. Another 3 sessions, of course, ahead of us. And all eyes on what happens in the US market action tonight. With that, it's a wrap on this edition of Closing Bell. Thank you very much for watching us and for being with us. It's a goodbye from the entire team. But don't go anywhere, because our Tuesday special Commodity Champions is coming up next.